crypto market isn't crashing, it's evolving quietly. The headlines are quiet, the prices are flat, and beneath the surface something massive is brewing. Corporations are quietly loading up on Bitcoin, Ethereum is evolving into an income-generating asset, and a wave of altcoin ETFs are lining up for approval. The market isn't dead, it's being restructured. Today, we are pulling back the curtain to show you what is really happening behind the scenes, so you're not left in the dark when the next bull run begins. Hi everyone, I'm Neil, and in today's video we are diving deep into the quiet revolution unfolding in crypto. Let's get into it. Alright, before we get into what's really going on behind the scenes, let us start on the front lines, because the charts always speak first. So, let us see what the price action is telling us today. Bitcoin kicked off the session at 105.1k, and at first things looked calm. Price was stable, moving inside a tight corridor. Above, we've got a liquidation zone stacked from 106.3k to 106.8k, and that's where short positions are lined up to get wrecked. Below, strong support at 104.7k, buyers were waiting. Then came the first big move. Bitcoin surged to 105.9k, but it didn't have enough fuel. It got smacked back down. Tried to bounce at 105.2k, but instead, it collapsed all the way to 104.1k, nuking a long liquidation zone along the way. After that wipeout, price rebounded, it broke through resistance at 105.3k, hit 105.5k, but that's where momentum stalled. Since then, we've been on a slow, steady decline. And by the time of this video, Bitcoin is hovering around 104.9k. Now, let's talk key levels. Resistance. The first resistance is at 105.5k, then a heavier zone sits between 106.3k and 107k, and above that, a thinner band from 107k to 108k, but still enough to slow any rally. For the support, downside support stretches from 104k to 103.2k. That's a wide buyer zone, but if it cracks, things could get ugly fast. Conclusion. Bitcoin is stuck between major firepower zones. A break above 105.5k could spark a run, but if 104k fails, we could tumble toward 103.2k. So stay sharp, this is a battlefield. Time to dive into the CVD and whale moves. This is where the smart money speaks. First up, CVD. It shows us in real time whether more people are buying or selling. And right now, no major changes in the sell wall on fire charts. That means large sellers are still sitting tight, waiting to unload if Bitcoin climbs. In other words, there is still pressure overhead. Now, onto the whales, the big players. The brown line tracks large orders between 1 million and 10 million USD. And right now, they are buying fast, quietly stacking. And that's a bullish signal. The biggest players are still in the game and they are loading up. Then we have the purple line showing orders between 100k and 1 million USD. It's been climbing too, following the brown line's lead. They're rising more aggressively than any other player. But just recently, it started to cool down and shift slightly into selling. Overall, the broader whale trend is still tilted towards selling. Most large players are playing it safe, likely waiting to see if support levels will hold strong or give way. So, here's the big picture. Mega whales are buying. As expected, they are accumulating while the rest of the players hesitate. Most other big players are still selling or just waiting, being cautious, not ready to jump in yet, so we are at a turning point. The big question now is, do the bulls have enough power to break through resistance? So stay alert, whatever happens next could shape where Bitcoin goes in the short term. Alright folks, do you know who's quietly but powerfully moving the market right now? It's the corporations. Recently, a Norwegian brokerage called the K33 announced they raised 6.2 million USD, and they are converting all of it into Bitcoin to stash away in their vaults. And there is one simple reason: the Bitcoin treasury strategy. That means they are swapping part of their company assets into Bitcoin for the long haul. We are not selling, we're just stacking it, they say. What's amazing is this isn't a one-off event. Companies like MicroStrategy in the US, Metaplanet in Japan, even Coinbase and Tether, they are locking a portion of their assets into Bitcoin. This is no short-term fad. It's an era where multiple companies buy Bitcoin every single day. Here's the question. If companies are buying Bitcoin every day, why isn't the price going up? Sounds weird, right? Economics 101 says if supply goes down and demand goes up, the price should rise. So, why are we seeing the opposites? There are two main reasons. First, market manipulation. Big players deliberately suppress the price to buy more cheaply. Since Bitcoin supply is limited, this strategy lets them accumulate more at lower prices. Second, ETF demand is on hold. Bitcoin spot ETFs have seen 31 consecutive days of inflows with $800 million pouring in one day alone. Yet prices dropped. Doesn't make sense, right? The truth is, Bitcoin held in ETFs doesn't get sold. That means circulating supply is shrinking, but the price hasn't reflected that yet. Now, let us talk about Ethereum. An American company called SharpLink just announced they are investing $425 million USD to fill their company vaults with Ethereum. And here's the kicker. They hired Joseph Lubin, one of Ethereum's co-founders, as a board member. This is basically a strategic alliance with Ethereum itself. It's more than just an investment. Ethereum is leveling up to institutional asset status, just like Bitcoin. So why Ethereum? First, it generates staking rewards. Bitcoin just sit there, but Ethereum holders earn 3 or 4% annual returns just by holding. For companies, this means their assets aren't just locked away, they are making money. Second, Ethereum supply is shrinking. Stacking, DeFi, and Layer 2 scaling solutions reduce the amount of ETH circulating on exchanges. Meanwhile, institutional demand grows. Price pressure? Obviously heading up. Third, an ETH ETF is quietly waiting in the wings. BlackRock is negotiating with the SEC, and if a staking inclusive spot ETF gets approved, Ethereum will be redefined as an interest-bearing asset, not just a coin. Now, the altcoins are starting to catch fire. The SEC recently postponed decisions on spot ETFs for Cardano, ADA, and Avalanche, AVAX, until July 15th. Is this just a delay? No way, no way. It's happening at a critical moment, because over 50 ETF final decisions are scheduled for June and July. Until now, Bitcoin and Ethereum have stolen the spotlight. But now, Cardano, Avalanche, Ripple, XRP, Solana, Litecoin, and others are lined up, waiting. Here's the big deal. Many of these ETFs will include staking. That means instead of just holding ETFs, we are looking at income-generating ETFs. What happens then? Existing coins were just a store of value in institutional portfolios. But soon, they will be re-evaluated as interest-bearing assets. For individual investors, this is a whole new game. Where before you bought alts just on hype, now institutions can treat them like real income-producing assets. When this happens, the real altcoin season starts. Not a 7% bump, a full-on institution-driven alt bull market. And that's coming soon. Now, the biggest question. What should we do right now? The market is quiet. The news is confusing. Prices are stuck in limbo. And it feels like, would it rise? Would it fall? Forever. But here's the truth. This is when the gap between the informed and the uninformed widens. Right now, institutions are buying Bitcoin. Companies are filling their vaults with Ethereum. Altcoin ETFs are waiting in the wings. The entire market is gearing up for the next cycle, while individual investors are still wondering, is this a dip? And watching from the sidelines. You know this too well. The real bull run starts when no one believes it. So what we must do is not run away from the market, but gather information and enter positions gradually, step by step. Seeds of a bull market are always planted in quiet moments. Right now is exactly that moment. So, before we wrap up, here's what you really need to remember. When prices move sideways, it's easy to get bored, distracted, even discouraged. But this is exactly when institutions make their moves. while the public misses the signal. So the real question is, will you stay asleep or get ahead of the crowd? Keep researching, stay sharp, and remember, the bull market doesn't start with a bang, it starts with silence. And when it begins, you will want to already be in position. That was Neil, I will see you in the next one. Make sure you're watching the full board, macro trends, regulation, capital flows, and sentiments, because that's where the real game is played. If you found this breakdown helpful, smash that like button and subscribe for more. Bye bye.